Alrighty guys, what is going up? I hope you guys are all having a great and amazing day today. Now in today's episode, we're going to be talking about NIO. Now this stock is almost at $50 per share. And I did call this stock out at around $11 per share. So congrats to everybody that made money on this. So we're going to be breaking down really my trading strategy behind this company and why I think this company could continue to grow in the future. So I hope you guys enjoy it. If you guys get anything in value, make sure you guys hit that like button and subscribe to the channel. If you have any questions, go ahead and ask them in the comments. Also, if you guys want to learn more about investing in the stock market, guess what? I do have a $5 course really talking about how to properly invest in the market. So make sure you guys check it out. So roll the intro. Let's go. Bam. Alrighty guys, so we have ticker symbol NIO. This is also known as NIO. NIO is that electric car manufacturer based out of China. And just by looking at the chart, you guys can see that the stock has done extremely well. Just today, it's up around 12% in value, almost hitting $50 per share. And yes, I did invest into this company. I wish I would have bought more shares, but I did invest roughly $2,000 at around $11 per share. So I'm up a little bit on my investment, but we're going to be talking about this company. Is it overvalued? Where are some good opportunities to hop into it? Some fundamentals here. So why is this stock up so much? Well, we've had a lot of fundamental catalysts. So fundamental catalyst is pretty much when a company puts out anything. It can be in news. It can be a FDA approval if it's like a medical company. But NIO did put out their overall revenue, and they did grow by 150%. So this is why we've had an extreme buying pressure today because of that fundamental catalyst. You know, when we have a strong catalyst like a beat in earnings or something like that, very often we'll have the stock go up in value. And that's exactly what we see with NIO. Not to mention JP Morgan Chase did increase their price target from $14 to $40. So I do think that definitely helped this company because a lot of people kind of take JP Morgan's Chase, analysts very seriously. And so they're more likely to invest in a company that's undervalued in their opinion because they are considered professionals. Not to mention they did also release their car deliveries. And guess what, guys? Guess what? They beat their car deliveries by 133%. So I do think this company is growing at a very, very rapid rate. And now when you have so much momentum in a company, just as fast as it's gone up, it can go down in value. So that's what I want you guys to understand. Each time NIO climbs up in value, the risk level goes up. Okay. So Carter, what is a good, strategy to use to invest in NIO? Well, the one that I like is called dollar cost averaging. Now, the reason why I like this is because you don't need to time the market. Dollar cost averaging is a good strategy for beginners to invest in a company and get a good average price for their shares. So you don't have to try to time the market because everybody thought they were overvalued here. But if you would have used dollar cost averaging, you would have been averaging your shares down, right? And then when the stock went up, you would have been making more money. So it's just a little strategy that I like to use. So what you do, you pick out your total investment. So if let's say you want to invest maybe $1,000 into NIO or $500, let's just use $1,000 for the example. Now what you do is you take $100 for the next 10 weeks and you invest into NIO. So instead of trying to time the market, instead of investing one lump sum, you're just spreading out your monthly payment. So you're going to get a good overall average price for that 10-week span. This really eliminates volatility. You get a good average price. And honestly, you don't have to check the day-to-day price. And honestly, you can be more relaxed with your investing. But Carter, where do I see this company going in the future? Well, I do think NIO could probably have some temporary sell-off here to about $45 to $40. But I do think if anything, it could come in contact with 45 because that is that old resistance here. You guys can see it came in contact with it. We got some sell-off here right at that 45 mark. So I do think that old resistance is going to turn into some new support for this stock. So honestly, that is where I would set my alerts if I was going to do the one lump sum, but I still think dollar cost averaging is going to be a great way for you guys to make some money on this company. And honestly, I am looking to average in to my share. So I do think around $45 will be my entry because it's going to be that a new support for this stock. So that is my breakdown for this company. I do think this company has a lot of promise, and I would not be surprised if I see it hitting 55 bucks by mid to late next year. That's how strong I believe in this company. But with that being said, it could easily fall back down to $45 to $40 per share before we see that 55 mark. So that is it though. I hope you guys enjoyed the episode. And if you did, make sure you guys smash that like button. We'll see you guys tomorrow in another episode. Remember to stay happy, stay positive, and especially right now, guys, stay safe out there. We'll see you tomorrow. Take care. Bang.